Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in and the rate hikes continue to set ablaze, not just the stock market, but also the housing market. So in a short amount of time, once the unemployment rate starts to increase, federal government will have no choice but to call a full-blown recession. And you guys want to say full-blown recession is called, things will start spiraling out of control even quicker. But obviously the rates are a very, very big deal when it comes to the housing market and our economy as whole. So today what we're going to do is we're going to access some information from the National Association of Realtors, and then I'm going to bring you guys up some Fed economic data charts for us to dig into some data. But where we're going to start is accessing a Zillow article titled "Mortgage Rates Move Higher as Fed Commits to Containing Inflation." And you guys remember, this is my personal YouTube channel. Even though my bio is as a realtor, loan officer, and instructor in all things real estate in Texas, you guys, for my efforts for this channel, for my message, please tap that like button, you guys. Shoot me a comment below. You guys know they keep me going. But regardless, let's get started in this article right now. And you guys, this is a very, very brief read, and then we're going to start accessing charts and bullet points from National Association of Realtors as well. Now, here it goes. Mortgage rates moved higher again last week. Fed Chair Powell noted late in the prior week that the Fed is committed to containing inflation, which will likely result in some economic pain. While data is pointing to easing pressure on prices in several sectors, the level of economic activity appears to give the Fed more runway to raise rates before triggering recession risk. Employment data, while softer than prior weeks and months, still highlights a tight labor market and inflationary pressures pushing up wages. Investors are adjusting expectations for short-term interest rate given these results, now expecting rates to increase more and stay at elevated levels for a longer time. Markets will be focused on comments from Fed officials before they go into a quiet period in front of the September FOMC meeting later this month. And also, guys, remember the Federal Reserve has said, according to their plan, that they're going to increase the sale of mortgage-backed securities to $35 billion. The total asset selling program should double this month to $95 billion, mortgage-backed securities being $35 billion of that. But here's the thing, you guys, it should be no mystery what the Federal Reserve is going to do. Although I get it, they flip-flop like crazy, but Jerome Powell has already told us he's going to fight inflation. More tightening is coming, more interest rate increases. So it's really kind of shocking how the market keeps forgetting that and keeps, waiting for the Federal Reserve to pivot. The thing is, guys, he wants to pivot. The Federal Reserve does want to pivot, but they can't pivot because remember this, don't forget this. We have 40-year high runaway inflation. Now, hopefully the inflation and the CPI peaked, but we still don't even know if it peaked. We don't even know if it's plateaued. So there's a lot of things that are happening right now that essentially is signaling to the Federal Reserve they have no choice but to tighten up. Now, essentially what the tightening up is going to do is it's going to lead to more unemployment. It's going to continue to rock the stock market. It's going to continue to rock the housing market. So let me show you guys exactly what has happened so far in the housing market from a sales standpoint, because I believe in 2023, and I'm in the industry, so this is unfortunate. It's not only going to be a dark time for the housing market, it's going to be a really dark time for the industry leaders like lenders and like realtor shops. We're going to take a beating in 2023. I have no doubt about that. But take a look at this article right now. Now, this is from the National Association of Realtors, and there's just some key highlights that I wanted to go over so you guys understand how much have sales actually plummeted as a result of the interest rate hikes, essentially making things unaffordable. So let's read some key highlights. Existing home sales fell for the 6th consecutive month to a seasonally adjusted rate of 4.81 million. Sales were down 5.9% from June and 20.2% from a year ago. 20% is big, especially for lenders that set up shop based on refinancing, which is a massive, massive mistake to do, obviously, because refinances always go away. The median existing home sales price climbed to 10.8% from 1 year ago to $403,800. That's down $10,000. However, from last month's record high of $413,000, 800. This is a huge indication. This $10,000, obviously sales are down and so are prices. The sales are going to eat into obviously prices as people want to ditch their home. Now, not everyone's going to want to sell their houses, and a lot of resale houses will not sell because they have such a low interest rate, but that doesn't mean investors won't flip and sell, and that doesn't mean that divorce, hardships, and other things like that won't force people to sell, plus new construction. Let's read the last bullet point. The inventory of unsold existing homes rose to 1.3 million by the end of July, or the equivalent of 3.3 months at the current monthly sales pace. So we need to see essentially 6 months here, basically, for the housing market to kind of be a buyer's market. Generally, we need more than 6 months of inventory for us to be able to consider it a buyer's market. So we're getting close. I'm not saying we're necessarily there yet, but if you are out there shopping and you are out there trying to buy a house, I want you to be mean and I want you to treat the industry as if it is a buyer's market and find someone that's desperate. And probably, depending on your metro area, look no further than new home builders. New home builders have no choice but to sell. They have unfavorable financing, unlike the resale houses that have 2, 3, 4% interest rates. Now, just to put this in perspective, let's visualize this data. All right, so here's a sales chart, guys, and you can kind of see here how sales have been going down ever since the tightening, right? So right around here to here is when the Federal Reserve started tightening. They started talking about it here, but you can see a steady downhill drop in sales. So if you fast forward to July and you know, kind of look at this in comparison, you can see that we're way down in July. I mean, over here, October of last year, we're at 6,000. Here's September, here's August. So again, you guys, normally these months are the best months of the year, but you can see here, they're actually the lowest months so far of this year, despite historically summer and spring months being absolutely hot times in real estate. So what that should tell you guys is the magnitude of the interest rates affecting the housing market, because we're coming out of a red hot, historically hot housing market in the top months of the year, spring and summer, and sales have completely been gutted. So it stands to reason once we enter the dark period, which is fall and winter, what do you guys think is going to happen? What do you think is going to happen? That's why I say 2023 is going to be a dark year. And I'm not saying to get complacent. You need to double down your preparation right now, because Blackstone just got $50 billion together that they're waiting on the housing market to crash so they can buy opportunities like crazy. And if you don't prepare, they will. So that's why I'm always warning you guys to double down right now. But let me show you this next thing right now, which is the unemployment rate. And this is why the Fed hasn't declared a recession. They're holding on to the unemployment rate, which is a mistake. We need to rip the Band-Aid off the bullet hole, but it is what it is. Look at the unemployment rate. So here's the unemployment rate, guys. I mean, it is low. It's only 3.7. I mean, that is so low. Before pre-pandemic, we were at about the same. So we're at about, a little lower, I would say, than we were pre-pandemic. But the thing is, guys, we're actually not where we were pre-pandemic, because most of the new jobs are seasonal jobs. They're not 9-to-5 jobs. So this is fake. This is fake right here. It shouldn't be this low. And here's the thing. Here's one of the primary reasons why the unemployment rate is still low. EIDL and PPP loans, we paid for this. We paid for this labor market, and that's why you're seeing that. But here's the thing, you guys. Once we hit recession, once that unemployment rate goes down, I believe that's the moment where things start spiraling out of control and negative equity growth starts spreading throughout the nation. And here's why. Take a look at the bubble right now. Okay, this is what I'm saying. This is the median sales price for houses. Now, look, this is normal prices for houses. Is about a 5% growth, but here's the bubble. Look at this massive upward direction in equity. This is not sustainable. Right here is to 2018, 2017. Look at this. Relatively normal, right? But because of this right here, breaking fundamentals, this whole thing now is a bubble. This whole thing is a bubble. And that bubble, you guys, is going to pop because, again, we need 5% growth, because 5% growth keeps up with normal 5% wage growth. So quite frankly, we don't even have the tools to sustain this. Think about that, guys. Now, I know there's a lot of people on YouTube and realtors, and they're saying all this crazy stuff. But the thing is, guys, it's your money and it's your investment. It's not theirs. They want to make a sale. They want to make commission. Maybe they want clout. Maybe they want stardom. Who knows? But this is your money. It's not theirs. And that's why I always provide you guys the links to the data. Formulate your own opinion. I'm just calling alarm to these data sets. Take a look for yourself. But regardless, you guys, you know I appreciate you watching this video, and I really hope you guys got value from it. Now, if you're out there investing in real estate, you know I wish you luck, and I hope you win.